What's up, stock fam? I'm back with another video today, you guys. Y'all see that Stitchfix stock has been going through the roof, you guys. Now, before we get into this video, make sure you hit that subscribe button, tap that bell, turn on your post notifications so you can be notified when your girl posts another video. And do not forget, stock fam, I will be doing a $500 cash giveaway when I reach 5,000 subscribers. The only thing you have to do is subscribe to my channel, turn on your post notifications, and watch the videos, you guys. And we got other goals, you guys. So make sure you check out the description tab right now. And y'all, we can meet those goals. But enough of this rambling alone. Stitchfix is up, you guys. Stitchfix is up $15.61 today, and that's 43.59%, and it's still moving up. Now, I know y'all may want to get in on it while it's going up like this, but y'all, make sure you wait on that drop if you want to get in on this particular stock, because it's on a bull run. And if it dips, you guys, if you get in at the wrong time, you could lose money, okay? So I suggest you wait on this dip and then you get in on Stitchfix if this is the particular stock that you wanted to get in on. But I highly recommend that you do your research first. Now, let me tell y'all, let me get to the point where I tell y'all why this stock is going up. So y'all stick around and listen to your girl. Now, this particular stock opened up today at $51.05. And today's high, it has been $54.94. And today's low, it has been $48.66. Now, the 52 weeks high is $54.94, and the 52 weeks low is $10.96. Now, whenever this stock was $10.96, I hope y'all cop that stock, okay? And y'all let me know in the comments what dollar amount that you get this particular stock if you have already invested in Stitchfix. And if you have not, hey, wait on that drop, do your research, and get in, okay? So let's go down here to recent news. And I always say, if your stock has recent news, you guys, make sure you read the recent news. So we're going to be getting into this particular article. And after this article, you guys, we will be going over Stitchfix trade options. So stick around if you're interested in Stitchfix trade options, okay? The Wall Street Journal. And I know a lot of y'all familiar with the Wall Street Journal, and that's one thing I do like about Robinhood. It is so informative, you guys. Now, you can pause this particular video and read this article yourself, but I will be going over this article for you guys, all right? Stitchfix shoppers see the light, heard on the street. As traditional bricks and mortar retailers continue to endure sales decline, Stitchfix quarterly results released Monday afternoon show how the experience of shopping for clothes could be changing for good. Stitchfix said that in addition to double-digit year-over-year revenue growth for the quarter ended October 31st, it saw the highest sequential net client additions in its history. Investors sent shares surging 42% Tuesday morning following the report. That reaction is likely less a reflection of the quarter itself. Revenue growth of 10% was a far cry from the 21% pace Stitchfix posted for the comparable period last year, and more the expectation that record client growth will pay off later. It likely also was exaggerated by very high short interest in the stock heading into earnings. The company still has to show that it can improve margin. Stitchfix, which offer algorithmically personalized clothing with the help of a stylist, for years has been asking new clients to ditch decades old habits of trying clothing on in a store before paying for it. For the first several months of the pandemic, it seemed this was too big of an ask for many shoppers. Stitchfix sales in quarter ended August 1st grew from 3% from a year earlier after falling by more than 9% in the prior period. But the company latest results suggest that many more consumers are coming around, and it is happening just as a window of opportunity is about to close. When more shoppers feel comfortable visiting shopping malls as COVID-19 cases recede, Stitch Fix might have hooked customers for good. So you guys, with this particular website right here, and if you don't know what Stitch Fix is, you can also Google this website. They have a website and an app, you guys. Now, with Stitch Fix, you can order the clothes, try them on. If you don't like them, you can return them, just like if you was in a store, you guys, which is amazing. Okay, perfect idea. Okay, you guys, the more engagement Stitch Fix algorithms see, the better they seem to get at predicting what consumers will buy. For a styling fee, Stitch Fix sells clients a fix of a handful of pieces that they can try on at home and then buy or return. So with Stitch Fix, y'all, they have, it seems like, an online stylist. So y'all may want to check that out just in case. And if you're interested in getting up in this stock, you guys, I feel like it can go up even more, okay? Stitch Fix said over the last 2 quarters that nearly 80% of its first-time Fix clients purchased at least one item and said they were looking forward to their next order. That is the highest level of successful first fixes the company has seen in the past 5 years. It also said that clients purchasing a Fix for the first time grew 25% year over year in the most recent quarter. Once hooked, clients tend to spend more on subsequent fixes. Stitch Fix guidance suggests it can continue to build on its late pandemic momentum. The company said it expects recent customers' addition to help yield at or above pre-pandemic revenue growth in the back half of the year. It made money on the basis of adjusted earnings before interest, tax, depreciation, and amortization in the most recent period. But the company said it expects to swing a loss on the same basis in the January quarter because of increased marketing spending. The company said lower priced products has been popular amid the pandemic. While Stitch Fix might deem a one-time purchase a success, it is unclear how many pieces on average are needed for Stitch Fix to turn a profit. They really making money if they're selling their clothing, you guys, for cheap. And also, you can try them on at home. If you don't like it, you can either buy it or return it. Man, this is amazing. So this particular stock, you guys, it has potential. And if you do not believe me, make sure you follow it and keep posted on this stock because it could go up even higher, okay? With its shares now up by roughly 90% over the last 3 months, the burden is on Stitch Fix to prove that it can tailor a consistently profitable business from its increasing ranks of satisfied customers. And of course, you guys, I think the customers are satisfied. If you do not have to go in the store and purchase clothing or even try it on in the store to see if it fits or not. So this particular stock, you guys, oh my God, it could shoot up even more. I'm telling y'all, but make sure, you guys, you do your research first because this stock could dip, okay? It is on a run right now. It is on a run right now, you guys. But let me tell you, It could dip and go back down at any time. So be careful on where you invest on this stock. I highly recommend you to invest on the dip stock, fam. Okay, now you guys, we're going to get into the Stitchfix trade options. Okay? All you got to do is click on trade, go to trade option, and bam. Now, if you think this particular stock will go up, make sure you click the arrow that says up. And if you think it's going to go down, you can click the arrow that's going down, okay? But we're not buying a put. We're going to buy calls. And like I always tell you guys, stretch out your calls. Your calls, okay? Because eventually in the long run, it will gain more money because stocks tend to go up. Now, you do not want to do a call for the next day or 2 days later or 3 days later, you guys. What you want to do is go out. Go out. I would say if today is December the 8th or 9th or whatever it is, go out, you guys, a month away, okay? Or even further out, okay? But make sure you know this. The further you go out, the more it calls for a contract, okay? The prices go up even higher, okay, you guys? But now, if you're wanting to make money with a call option, you guys, okay, you see the share price is $52.22. Now, underneath that, you have a $50 call. That means it's in the money, you guys. Now, anything below the share price is in the money, which that means also is closer to the share price. Now, the closer your call options are to the share price, the easier it will be to gain money if this stock goes up, okay, you guys? So, right here, the first option we have is a $50 call option, okay? That's $6.30. The break-even price is $56.30. Now, if you think this particular stock can reach $56.30, you guys, this will be your option at $6.30 a share, okay? But let me tell y'all this, $6.30 a share, you have 100 shares in one contract. So if you buy one contract, you guys, that would be $630, okay? So just remember that. $6.30 a share, and you got one contract, which is 100 shares in a contract, you guys. So even though you may see the price is $6.30, that's for 100 shares. Now, if you go down and try to find a call that is closer to $2.30, you guys, that's going to be even more. Now, give and take, $39.50 call. Your break-even price is $52.43. Now, you guys, that is 13 cents from the share price. Now, if you know that this particular stock can move up 13 cents, man, and it's already out a whole year, almost a month or so, you guys. So 13 cents, of course, the way this particular stock is moving, it may go beyond $52. Now, if you click on this particular call, like I said, it's $12.93 a share. You have one contract, which is 100 shares, you guys. So if you get one contract, that would be $1,293, you guys. And like I said, the closer these call options are to your share price, the more they will be. And the further out your call options are, the more they will be. Okay, you guys? So I highly recommend that you always get an option that's below the share price, you guys. Those are in the money calls. But like I always say, stretch your call options out as far as you can, you guys. As far as you can, okay? If you have the money, all right? Just try to stretch them out. So therefore, you will have time for these options to grow. Now, the bad end of these call options, you guys, is that you can lose money very, very fast now. So be careful when you're buying call options because you can lose money fast. I'm talking about quick, because if these stocks go down dramatically, you will be losing dollars. Every cent is a dollar. So if a stock go down 10 cents, that's $10, depending on how many contracts you have. Okay, you guys. Now, for these particular contracts that stretched out March the 19th, 2021. Okay, we went out a little bit further, you guys. But like I said, the further you go out, the more the contracts will be. Now, if you want to stay close to the share price, which the share price is $52, you guys. So you already know that if you get I would give and take a $30 call, you guys, or even a $29 call. And to make it even better, y'all, we're going to go to a $28 call, which the break-even price is $52.33. And the share price is $24.33 a share, you guys. So if you click on there in this, you already see that this particular call is so close to the share price, you guys, 11 cents different, even though it will expire March the 19th. So you already know it can get up past the share price by March, you guys, because March is a long way away. And if you've been making money off this call option by March, oh my God. Oh my God. That's all I'm going to say. Because on these particular options, y'all, it's so easy to make money. If it's real close to the share price, it's easy to make money. I'm talking about buku loads of money, okay? Now, the price per share is $24.33. One contract will be $2,433. Now, give and take, you guys, even though you're spending this much money on a call option, just know if it starts going up, you will make this back plus, because you will have until March for this particular option to gain. So that's a long time for that option to gain, you guys. And if you want to go further out, y'all, you can do that. You can do that. And if you feel like you can buy a call option that's out of the money, which I mean out of the money call option is a $65 call, saying by June the 18th, this stock can get to $71.33. Or even a $60 call, saying that this stock can get to $67.35 by June the 18th. Now, if you feel comfortable with buying an out of the money call, you guys, and hopefully it reaches that break even amount, you can do that. You can do that, but that would be a lot of money to risk, okay? That would be a lot of money to risk. And you can go out even further. Anything above the share price, you guys, is pretty much out of the money, because the share price at this point is $52.11. So that means you have to at least gain about $21 by January the 21st, 2022, which is a long time, you guys. Let me tell y'all one thing about these options. You don't want to set an option for a week or two, because guess what? you can lose a lot of money. Now, if you set this option out for a year, and you know you can make it out of the call, option, you got a whole year for this stock to reach $73.80. Now, if you're going to go and get that, it will be $8.83 per contract. Okay, you guys, so that means it will be $883, you guys, because that $883 per share, which is 100 shares in one contract. Now, if you feel comfortable with this particular option to go out until January the 21st of 2022, hey, that would be the option for you. It is kind of pricey, you guys. So I wouldn't recommend. If you don't have the money, don't do it. Now, if you have the money, hey, go ahead. But you will have a whole year for this contract to grow. And that's the power of these options, because you can stretch these options out for a long period of time. And it just takes patience, you guys. So if you got the patience to wait on your option to grow, this would be the perfect option for you, okay? Like I said, the share price is $52.36. And it's going up, you guys. Now, the closer, let's go this one time again. The closer you get to the share price, y'all, the closer you get to the share price, okay? So we're going to give and take, let's see. We're not going to go under the share price, but a $3 call. So that particular break-even amount is $52.35. You got until January the 21st, 2020 for this stock, Stitchfix, to get to $52.35, which is going up right now, you guys. That's the thing. Once it passed that share price, you guys, that break-even price, you already making money. You already making money. So we're going to go to $52.90 break-even amount. $18 call option, okay? If you got it, this will be your bet, your perfect bet right here. Stretch that mug out, and then you can sell it whenever you get ready. Even if it's before a year, you've known you made your money back plus double or triple the amount, you guys. So it's $34.93 a share. There's 100 shares in one contract. That will cost you $3,493, you guys. Y'all hear that? $3,493. And like I said, that would be your best bet. Stretch your options out, you guys, for a longer period of time. So therefore, you will have time for that option to make money, okay? It will make money over time. You just have to be patient and let your money make money. But I just wanted to inform you guys on Stitchfix. Make sure you hit that subscribe button, tap that bell, turn on your post notifications so you can be notified when your girl posts another video. And do not forget, Stock Fam, I will be doing a $500 cash giveaway when I reach 5,000 subscribers. The only thing you have to do to enter this giveaway is subscribe to my channel, turn on your post notifications, and watch the videos, you guys. That's all you have to do. And I will be back with another video soon. Peace.